Like many others, have you find yourself wondering about the latest trends and developments in the world of finance and technology? Perhaps you've been hearing more and more about cryptocurrencies and are curious about what all the hype is about. Maybe you have concerns about the future of traditional payment methods, or you're hopeful that these changes will lead to a more inclusive financial system. Whatever your motivations may be, today we'll be delving into one of the most talked about topics in the financial world, cryptocurrencies. Cryptocurrencies have been making headlines for several years now, with more and more people looking to invest in these digital assets. Cryptocurrencies are digital or virtual tokens that are secured by cryptography, which helps to ensure that transactions are safe and verifiable. Unlike traditional currencies, which are issued and regulated by governments, cryptocurrencies operate on a decentralized, peer-to-peer network. This means that they are not controlled by any central authority or financial institution, and users have more control over their money. Now, before we dive deep into the pros and cons of cryptocurrencies, let's take a step back and understand the history of money and how we got to where we are today. Money has been used for centuries as a medium of exchange, a unit of account, and a store of value. In ancient times, people used commodities like salt, cattle, and shells as money. However, as societies grew more complex, precious metals like gold and silver emerged as a more convenient form of money. Fast forward to the modern era, and we see the rise of fiat currency, which is money that is not backed by any physical commodity but is accepted as legal tender by the government. In the United States, the Federal Reserve is responsible for issuing and regulating the US dollar, which is the most widely used currency in the world. The US dollar has played a dominant role in the global economy since the end of World War II. It has been used as the standard for international trade and as a reserve currency by central banks around the world. This has given the United States a unique position in the world economy, as it can print its own currency to pay for imports and debt. However, the US dollar's dominance has also led to problems, such as inflation and the devaluation of currencies in countries with weaker economies. This has created a demand for alternative currencies that are not subject to government control or manipulation. If you enjoy this type of content, don't forget to like and subscribe to this channel. In 2009, a person or group of people using the pseudonym Satoshi Nakamoto created Bitcoin, the first cryptocurrency. Bitcoin was designed as a peer-to-peer electronic cash system that would enable secure, fast, and low-cost transactions without the need for intermediaries like banks or payment processors. Bitcoin's underlying technology, known as blockchain, was a significant innovation. It allowed for the creation of a decentralized network that could securely record and verify transactions without the need for a central authority. This made it possible for people to transact with each other without relying on a trusted third party. Bitcoin's success inspired the creation of thousands of other cryptocurrencies, each with its unique features and use cases. Ethereum, for example, introduced smart contracts, which are self-executing contracts with the terms of the agreement between buyer and seller being directly written into lines of code. Now that we have a basic understanding of what cryptocurrencies are and how they came to be, let's explore the pros and cons of investing in them. The pros. Decentralization. One of the significant benefits of cryptocurrencies is their decentralized nature. It means that no government or financial institution controls them, making them immune to government or bank interference. Decentralization gives users greater control over their money, which is a fundamental aspect of financial freedom. Security. Cryptocurrencies use advanced encryption techniques to secure transactions and protect users' privacy. This makes them a more secure payment option than traditional payment methods. Unlike credit cards and wire transfers, which are vulnerable to hacking and fraud, cryptocurrencies are immune to fraudulent activities. Speed and low transaction fees. Transactions with cryptocurrencies are processed almost instantly, and their transaction fees are low compared to traditional payment methods. This is particularly useful for cross-border transactions, where traditional payment methods can be slow, expensive, and subject to intermediaries. Accessibility. Cryptocurrencies are accessible to anyone with an internet connection, regardless of their location or financial status. This accessibility gives individuals without access to traditional financial systems a means of payment and financial empowerment. Cryptocurrencies are also accessible to unbanked individuals, enabling them to participate in global commerce. The cons. Volatility. Cryptocurrencies are notorious for their volatility, with significant price swings being a common occurrence. This volatility makes them a risky investment, and investors should be prepared to stomach significant losses. Cryptocurrencies are subject to market speculation, which can significantly affect their price. Lack of regulation. Cryptocurrencies are not regulated by governments or financial institutions. This lack of regulation makes them vulnerable to fraudulent activities, such as Ponzi schemes, hacking, and other forms of financial crimes. Furthermore, there is no legal recourse for investors if something goes wrong, as cryptocurrencies are not backed by any government. Adoption. Despite their growing popularity, cryptocurrencies are still not widely accepted as a means of payment. This limited adoption restricts their use in everyday transactions, which can be an obstacle for cryptocurrencies to becoming a mainstream payment option. Some businesses are still reluctant to accept cryptocurrencies due to their volatility and regulatory uncertainty. In conclusion, cryptocurrencies are a fascinating and rapidly evolving technology with both potential benefits and drawbacks. While they offer increased decentralization, security, and accessibility, they are also highly volatile and unregulated, which can lead to risk and uncertainty for investors. As with any investment, it's important to do your research and understand the risks and potential rewards before investing in cryptocurrencies. While they have the potential to generate significant returns, they are also subject to significant volatility and can be a risky investment. Furthermore, the cryptocurrency market is still in its early stages, and it's unclear how it will develop over time. While some experts predict that cryptocurrencies will become more mainstream and widely accepted, others argue that they may ultimately fail due to regulatory issues or technical limitations. Ultimately, the decision to invest in cryptocurrencies is a personal one that depends on your risk tolerance, investment goals, and overall financial situation. If you do decide to invest, it's important to take a long-term view and not get caught up in short-term price fluctuations. In short, do your homework. So that's it. Thank you for watching this video on the pros and cons of cryptocurrencies. We hope that you found it informative and helpful. If you have any questions or comments, please leave them in the comment section below. And don't forget to like and subscribe to our channel for more content like this. See you in the next video.